Hello.
Hello watu. Okay, today we are going to talk about taxation.
You just hold on. You and me. Today we are going to talk about taxation. Just trying to see.
But the principle of taxation.
Mute one.
Yes.
Hello. Hello.
Sanction.
Please, Doc, there is an echo sound.
This thing goes to shoot. No works out. No bad open line. Look at it. Okay. One, two. Okay, email.
Usiamo un baru ni kata. Dan
This one is saying how do you
classmates. Itu hal yang usah kita negara saya. Tidak sih, begini kita.
Long oh. You know, we did. Yes, we are within time. We do income tax calculation at the moment. The bank calculations too. Your required money to do people areas will be done. Okay. The Bible now. This Wi-Fi here, imekuja na kuna hii imeweka moja tumie tu yangu kwa tu sawa. Ile kuna yangu. Okay. Natakana mpewe ofisi kubwa. Sure, yeah. Kwa mwekewa kidogo. Tulipea kidogo, even that. Nasikia wanataka kupewa maprofesa.
Halo.
Bebi sana. Sasa tazama kirutiera.
Piga kelele.
Watu. Hebu mute hiyo niendo bana. Mute hiyo niendo.
So I don't know how you will get them. How you will get them. I use my wireless.
Alternatively, hapo hawezi ongea tukisikia.
Nikifungua it will. So unless maybe
Is the dog around?
Hello? Are we there?
Good morning.
Morning too.
Good morning.
Yeah, morning.
Morning
Are
to.
people in this class?
Yeah.
Soon.
So quiet today. Is it because of the weather or what?
Weather. Nice. Boring.
We are still
Weather
here
inafanya watu
waiting.
wanalala.
If that class or not.
Ah.
Who's this one?
You went to the map at the right time.
Nafahamisha mama.
Okay.
Today we shall be having a very interesting interaction.
Already. Alafu sirili. Alafu kwa. Hata hakuchata nena. CJ no sirili.
And you stop talking your mother tongue.
Kole cha besho yako kala mama kole cha besho kala.
Who are these talking their mother tongue in my class?
Why are they?
You people you meet, you talk about it, Alkatazi, you are
And
not.
somebody tell that girl to stop what she's telling us about the boyfriend.
You guys stop telling us that you are.
Hawa watu wa Bungoma hawa.
Mambo iko nani?
Nani anakudanganya kila mzana kwenye banda kwa anatoka bibi.
Vivian, Vivian,
Nyinyi watu wa Bungoma.
Vivian.
Waluya wanasumbua bana.
Vivian.
Si unaweza mute tu. Mute. Mute tu kila mtu.
Yes, because you are noisy, we are forced to mute you so that we proceed. People like Vivian are talking about their man friends and boyfriends and sponsors. Shame on you. You don't want even to listen to anything. I was saying that today's class is very, very important. We want to see how to do the tax computation, and we'll be going through the steps involved. And by the end of the lecture, we expect that you must be able to compute the tax that a person is supposed to pay. Remember from where we started from? We did look at the course outline and what's expected of us, and we said there are key areas of the course that we have to look at. One was the area of statistics, two, the area of matrix algebra, three was issues of public finance, then taxation, and finally the area of index numbers. Today, we want to conclude our second topical area. And as we do this, we have to prepare for our Cat 1. Cat 1 that will be coming by mid of next month. I'm announcing the Cat 1 that shall be done next month. So don't bring excuses so that we don't miss out. Okay, email. So, what did we talk about public finance? We looked at functions of the government. We did look at why the government must raise revenue and sources of revenue. We looked at public expenditure, what guides the expenditures of the government. Then we looked at other sources of income. We looked at the balance of payment. We looked at the gross domestic product and the gross national product. We looked at budgeting as a tool for planning purposes, a tool that helps us take decisions, and a tool that helps us monitor performance. We did move ahead and saw how we prepare individual budgets. As we do that, we looked at the national budget and we saw the process. We did say that most national budgets are based on program and performance-based budgeting systems, which take the functional approach in most cases. Functional because of the functions that we did look at. The economic function looks at the growth of the economy. And that is what it is, or what it entails. Now we concluded public finance, and we began looking at issues of taxation. Because we said a tax is a compulsory contribution that is imposed on individuals to meet the expenses which are incurred for common cause. Now, we did discuss last time and saw the various types of taxes. We did see why we should tax. We did see issues of tax and principles that guide taxation. We discussed in our last lecture issues of tax evasion and tax avoidance. This arose as a result of a comparison between the gross domestic product of our country. And we saw that in less developed countries such as Kenya, the percentage proportion of tax revenue in relation to the gross domestic product is lower comparative to those other developed countries. Why? Because of the high tax rates. And it's because of these high tax rates that bring about issues of tax evasion and tax avoidance. We delved into the matter of tax evasion, and we did see that tax evasion is capitalizing on existing shortfalls or otherwise loopholes. These loopholes, we looked at them in 5 points. And we did suggest remedial measures. Now, we wish to look at mainly what cost the tax is all about. In our discussions, we saw that income tax gives the biggest proportion of the tax revenue of any country. To this end, therefore, there is need for us to delve into the matter of income tax and see how do we go on to do calculations so that we understand what it's all about. That we wish to do some calculations, and these calculations we must look at it. I was very particular with the remedial measures to tax evasion, and I ask you to think of what the government has actually done in the present time of our good nation. What has been implemented and what remains to be implemented. So today we want to focus on to the income tax, so that we see how do we compute the income tax. As defined earlier, income tax is the tax that's levied on the person's income. So anybody who earns an income, whether it's from salaries, whether it's from wages, whether it's from commissions, interests, savings, dividends, or the like, this constitutes the income of an individual. So under the income tax law, if you have an income of a certain amount, then you are bound to pay. Remember the principle of economy. Remember the principle of, are you seeing my screen?
You can put on your present.
Just wait. Let me get it to where we are so that they can see. And then, yes. The types of taxes. Yes. Okay. Right.
Jifunza F5. Unaenda hapo kwa live show. Live show. Live show.
I don't know where your laptop, where these things are.
No. Just click on my mouse again.
So are you able to see the screen? So what we are saying is that anything you earn is therefore taxable. And for this, we need to understand the key things that go with income tax. And number one is the issue of the gross income. When you talk of gross income, this is the total earnings that an individual gets, whether in a month or in a year. So if you take all your earnings, basic salary, interest on bonds, commissions, name them, this constitutes the total, constitutes the gross income. Basic salary plus all other allowances and receivables. This is what gross income is all about. Then we have a concept of relief. A relief is only but a discount, a waiver for that matter. So in this country, the tax law allows that you get a personal relief or a family relief. Many times, because you are paying tax as a person, so you are allowed and entitled to a personal relief. These are a discount that you get. Then we have what we call the taxable pay. What is it that is subjected to tax? That's the subject, the taxable pay. That out of your whole income, the gross income, you have a discount in terms of a relief. So if you take the gross income minus the relief, then what is left is none other than the taxable pay. What we are there going to subject to tax. And this normally is guided by what the Commissioner for Income Tax has provided. That we have certain provisions in the Act that say if you are on this and this, then you will not be taxed. This includes things like contributions to pension schemes. You are not taxed today, but you tax later at the time of payment. Issues of life insurance. These are not taxed today, but will be taxed at the time of payment. So taxable pay is the gross income less contribution to those registered schemes. And these schemes are registered with the Commission of Income Tax. Your tax liability is the actual tax that you pay. The actual tax that you pay as an individual. So how do we obtain this? We look at what are you supposed to pay less the discount that you are being given. So if you do that, then you get what you are to pay as tax. Then finally, of course, in employment, we talk of net income, what you actually receive as an individual after all deductions, and therefore this will be gross income minus all deductions, which includes what you pay as tax, what you pay as contribution to registered schemes, that is, if you have a life insurance, if you have pension, and any other obligations that you have. So we want to look at this and see how do we compute these issues of income tax. And as we do this, I want you to be very keen so that as we say that the percentage proportion of tax revenue in relation to the gross domestic product is lower in these countries because of high tax rates. We should be able now to see the high tax rate. How much tax are you going to pay out of your basic salary? This is what we want to look at. And this forms the basis of that statement that we say. So we can see this in form of this example. Assume that Mrs. Olive is a personnel manager with a certain company where she earns 26,000 per month as salary. House allowance of 20,000. Then we have these other allowances provided: responsibility, house allowance, car allowance, medical allowance. We are told that she also contributes 10% of the basic salary to a registered pension scheme. Remember, these are registered pension scheme. So he also pays, this was NHIF, but now we can talk of SHA, pays to NSSF, and also pays service charge, together with what she contributes in terms of her monthly shares to the cooperative society. We are also informed of the relief that she gets per month. And we are now required to compute what is her monthly income, what is her annual income, what is her monthly and annual taxable income, what is her monthly tax liability, and what is her monthly net income. This is a typical example of a scenario that we will find ourselves in and employees find themselves in. So let us see how to go about this. I hope you are able to see the board. So we have been given the information, and we need now to find out what is the gross income. So we have said that gross income, this is given by basic salary plus all allowances. That's what gross income is all about. So from the given test, let us see what that gross income is all about. From the information, you are given basic salary. So say basic salary, how much is it? You are given those allowances, list them. You have house allowance, you have car allowance, you have subsistence allowance. What other allowance are you given? It's there. So list all of them and add to see what the gross income is. Please do that and let's have the answer. We shall be engaging as we move. So you cannot see what I'm writing.
Okay.
But from where I sit, I can see the board clearly. Tap the other box here, pick your dog, your one. So whichever it is, this is very clear on our side and we are seeing the transmission. We are seeing the transmission. It's clear. So please do those additions and you can share your results in the chat box. Do it quickly to save on time. I'm told some of you want to see the question, so there is the question. You have basic salary of 26,000, house allowance of 20,000, subsistence allowance of 2,500, responsibility allowance of 4,000, car allowance of 8,000, and a medical allowance of 5,000. So if you do that, get some total. Don't want to move fast because this is the first example. I want us to go through together. If you did that correctly, then you should be able to get about 65,000. That's the total gross income. This is per month. That's the first part of the question. The second part of the question was per year. So per year, you multiply this by 12. Because a year has 12 months, multiply that, then see what we get. So multiplying this by 12, you get 786,000 per annum. So we have per year, and we also have per annum. Please count the figures. And look at the monthly and yearly taxable income. For the monthly and yearly taxable income, we need to find out what is this person entitled to as exemptions out of what is registered. Remember, we have been told that this gentleman pays 10% of basic salary to a registered pension scheme. So what we have is basic salary as given is 26,000. So we must subtract 10% as pension. So what is 10% of 26,000? This 10 over 100 times 26,000. And that should be able to give you 2,600. So taxable pay shall be equal to 26,000 minus 2,600. Do that, then we see what the taxable pay is. It was 26,500. Please confirm. 26,500. That's what you are given as. This was 65,000. I think we can confirm the mathematics. Confirm the mathematics. You see through it. Let me also work on it. We have done it wrong now. That's done. Please let us get this right. Taxable income. This is gross income minus pension. Our gross income is 65,000 less the pension, which is 10% of 26,000. So this will be 65,000 minus gross income was this 65 or 65,500, something like that. Minus 2,600. This is 65,500. Yeah. So see what that gives you. Our gross income is 65,500. Meaning if we checked the total, it should give you 65,500. So that when you now work out less 2,600, what you get is the taxable income. And that taxable income, if you have a calculator, you work it out quickly, it should give you 62,900. 62,900. I want to repeat. Gross income is basic salary plus all allowances. Olive earns a basic salary, subsistence allowance, car allowance, house allowance, totaling to 65,500 per month. This times 12 should give you around 76,000 per annum. Taxable income is gross income minus what is paid to the registered schemes. What's registered, as we are told, is pension. and pension is 10% of basic salary. Therefore, a gross income of 65,500 minus 10% of 26,000, that gives us 65,500 minus 2,600. That gives us about 62,900 as taxable income. This is the amount out of the total 65,500 that we are going to tax. And this is per month. Per year, we multiply this by 12 to get the annual taxable income. Now, how do we proceed to now compute the tax that is paid? For us to proceed, we must use tax tables. That we have tables that have been provided, and these tables take various forms. Call them the tax schedules. So they give us the amount or the range, then there are two formats. We'll use them in our examples. That from 1 shilling to 10,800, you are taxed at 10%. From 10,801 to 21,600 at 15%. From 21,601 to 32,400 at 20%. From 32,401 to 43,200 at 25%. Then over and above 43,200, or from 43,200, this tax at say 30%. So this is our tax schedule. We are going to tax a total of 62,900 on the basis of this schedule. So let's see how to tax that amount. So we want to look at the amount and then the tax. That in the first schedule we are taxing from 1 shilling to 10,800. So for the first 10,800 at 10%, how much does that give us? This will give us a tax of 1,080. That deals with the first bracket. Remember, we are supposed to tax a total of 62,900. So we have only taxed 10,800. So the balance we have is 52,100 that we're supposed to tax. So we move that to the next level. This is 10,801 to 21,600. If you get the difference, say 10,801 minus 1, that gives you 10,800. If you take 21,600 minus 10,800, that gives you another 10,600. So meaning this bracket at 15%, we are also going to tax 10,800. So for the next, these are uniform. 10,800 at 15%. Get how much tax that is. So we subtract from this 10,800. So that gives us 41,300. So we have done the first bracket and the second. So we still have 41,000, which we now move to the next. 21,601 to 32,400. If you add up the difference, it still gives you the same amount. So we talk of the next 10,800 at 20%. Get how much that is. So we have taxed up to the tax bracket of 10,800, and this leaves us with this 503. So we have 30,500 that's left, which means we are going to tax it in the next. So if you get the difference, the next is also 10,800 at now 5%. So let's get 25% of 10,800 and see how much tax that person will be. So with ours, we have taxed 10,800. Balance here is, this will be 9 to 1. We are left with 19,800. Now, this 19,800 will tax it as the excess of 43,200. So the excess is 19,700 at 30%. So get that, then total to see how much total tax you will pay. Please complete that and let's see what your answers are. You must work out to understand. Please work out and the total. So I see most of you are getting 13,470 as tax that this person is supposed to pay. But you are given relief, so you subtract less the tax relief of 1,056. So subtract that, then you get the tax liability or otherwise the tax payable. Subtract that, then you get the tax liability or the tax payable per month. So please, the total seems to be 13,470. I see people getting different figures. Please check. So the net will be 12,414. That's what I'm seeing people get. 12,414. This is per month. If you ask per year, then you multiply that by 12. So that's how we compute using the given tax schedule. So the last part of the question is that we are supposed to get the net. Net pay. This is the gross income, which we got as 5,500 less those deductions. And deduction number one you put there is tax. The tax is 12,414. Next, you have the pension that you did calculate. When you calculate the pension, you got it as 2,600. Then you have those others listed. Cooperative society. We have, if we go back to the question, you will see, list them from the question. All of them. Then total all this and give us a figure here. Then, for this you will add to get a figure here. And for this, you subtract to give us the value here. So let us list all the deductions, get the total, subtract from the gross to get the net pay. Let us do that. I told you to carry calculators. So please come with, I hope you came with them.
Maybe the best way when we share them this question, they should explanation. When they are asking
For the question. Oh, so you want the question again? So the best thing is that you take a screenshot of the question so that we don't need to go back. So we have basic salary there. We have NHIF, NSSF, NHIF, NSSF from the question. Then you have service charge. Yeah. Then you have cooperative shares. Cooperative shares we will put there. I'll limit 2 examples. wakatoka university. Sorry. Please do faster and you are getting different answers for the net pay. Would you check your workings? You check your workings. Taxable pay is for 12,414. Pension is 2,600. Cooperative is 1,000. NSSF 500. NHIF, no, NSSF is 200. Service charge 500. NHIF 320. Those are the deductions. Total them and subtract from the gross of 65,500. Then see what you get. We are getting different answers. We should actually get the same answer. Okay, we can now proceed to example 2. So that was my working. So example 2.
Take a screenshot.
So you take a screenshot of that question. Example 2. An employee in a certain company drew the following benefits in a month of April 2021. Basic salary 20,000, house allowance 15,000, medical allowance 80,000, car allowance of 8,500, entertainment allowance of 5,500, responsibility allowance of 7,200. During the month, the employer made the following payments: 430 to NHIF, 5% of basic salary to a registered pension scheme, 3% of basic salary to the cooperative for shares, and 12,000 for a medical chemist for the drugs he had taken. In addition, an employee receives a tax relief of 1,056. Using the tax schedule provided, which we have, declared employees, gross income, taxable pay, tax charged, and the net income. Take that screenshot and work out. We want to see the answers. For the last 10 minutes, produce index numbers. Next week, tunafanya calculations, tunamaliza. Statistics. The following week, and statistics will take time, 2 to 3. Then nabaki nafanya matrix algebra. That way it will be done. Please share with us what you are getting. Gross income, share with us on the screen. $64,200. And what people are getting, 47,000. You put there what you have gotten. So you say gross income or whatever it is. So gross income is 64,200. Get taxable pay. Gross income is 64,200. Taxable pay 63,200, good. Proceed to get the tax.
Gonna pata. I think they want tax, but they use the same.
For the tax, you use the same. That one. Tax brackets, you use the same that we used that time. Use the tax schedule provided. For the first, from 1 to 10,800, 10,801 to 21,000, use the same. And this somebody with the tax charge 12,504. That's correct. Then you compute the net income. Income, somebody is getting that 7,666. Michael's me use the same tax schedule. That 7,666. At that point, we can now invite questions. Can unmute them.
Someone that could you can unmute.
If you have a question, you can unmute and ask. How to calculate the tax charge? We use the tax brackets, those tax bands that are given, and we follow the way they are given to get the tax and then subtract the relief. Opunyongesa, that's what we've been doing in the last two examples.
Hello, Doc. My question is,
Yes.
if you've calculated for the tax charge and then you are getting a negative value, how about that?
Tax charge can never be negative because you are supposed to pay. Remember from public finance discussion, tax is the main source of government revenue. So you must pay if you see the principle of economy, the principle of those principles we looked at under its public expenditure and taxation. Tax can never be negative.
Okay.
So the first question, we screenshot, we have shown that over 3 times. So, ladies and gentlemen, that is about taxation. We can work with those 2 examples. You can go to past papers. You can see the set and the questions that have been done in the past on taxation for your own practice. So that is what we can do under taxation. If there is no any other question to help us or to want us to explain. So this is what we are saying. You can screenshot this for your exercise. There was an employee of civil support and marketing. Screenshot that. And note that you have been given life insurance scheme. So how you treat life insurance scheme, this is registered with the Commissioner of Income Tax. So are we done? Are we done? Good. So let us look at the next area. This is the area of index numbers or indices. And we'll talk about an index. This is a value that summarizes changes in a variable. So when you talk about change, then it means you are talking about ratios. So change is viewed in terms of moving from one position to another. And therefore, we can express this as a ratio or as a percentage. So in this case, as we talk about index numbers, we are not looking at those that you are given perhaps during your KCPE, KCSE, but we are looking at a value that gives us the summary about the changes in a given variable, in a given attribute. It therefore implies that the changes in the magnitude of a phenomenon as measured from time to time is what describes what an index is. So from this, we can look at the percentage changes in terms of a number of aspects. And this, therefore, can be performed if we look at the change taking place from point A to point B. Where we are starting from is what we refer to as the base, and where we are analyzing from is what we are referring to as the year of analysis. So as we look at index numbers, we are looking at changes in a variable from point A to point B, where the point of origin, where we are starting from, is the base year, and where when we are analyzing or to analyze the changes, that becomes the year of analysis. Basically, there are various types of indices. We have prices, where prices change over time. We have stocks, we have quantity, we have cost of living indices, we have performance indices, especially when you perform, you are in first year, you will have the performance level for the first year, you will have second year, then at the end, you will have the overall performance index that will give you an opportunity to be graded and awarded your degree. We can talk about this in terms of production, we can talk about this in terms of salaries and wages, we can talk about this in terms of the business cycle. So if we look at this, any change in a variable that is measured, any changes in the magnitude of a given phenomenon as measured from time to time, which is performed by selecting the base and the year of analysis, that is going to give us what we refer to as an index. So everything has an index, everything can be computed, we can have a ratio and a percentage in terms of performance. Now, our main concern, as I said earlier, is in terms of computing and analyzing inflation, which is an indication of the cost of living. How do we do this? This is done by analyzing price changes. So for us in this course, we are going to focus on the price indices. And how do we measure price indices? We measure price indices by computing the changes in the prices of a commodity or commodities over a period of time. When you talk of the cost of living for the month of February, we are looking at the changes from day one to the last day. When we are looking at over a year, then we are looking at from this year to this year. So this is very, very important because it is used in analyzing and describing inflation. How the value of money has appreciated or depreciated according to the prices of commodities, how they have risen and how they have fallen. A rise in the price usually signifies the deterioration of the money value. So if prices increases, then the money value will have dropped. But if the prices reduce, then the money value will have gained. So we need to understand that interpretation, that any rise in the prices signifies deterioration in terms of the money value of the country. And any reduction in the price, therefore, signifies a gain in terms of the money value. Now, for us to understand price indices, we must take into consideration that we need to understand what is the purpose, because there are various types of indices. As we look at inflation, cost of living, what commodities are selected for inclusion? As we look at the same, we want to see what is the best, where are we starting from? We want to evaluate Ruto's regime as the president. We see when he took over up to where we are, how have the prices of commodities changed? Have they risen? Have they fallen? And therefore, has the money value gained or lost? That the choice of the average to be used, what type of index are we computing? And as we choose the type, there are those types that are plain, there are those types that come with the weighting. So we need to understand what are the proper weighting that we give, because we know all commodities are not the same. Some of us very bread, others bread is necessary. Some of us use sugarless. So to us, sugar is not important, unlike others. But we also see that price quotations come in different forms. We talk of price of a liter of milk, price of a kilo of sugar, price of a packet of tea leaves, price of a gorgoro of maize. You see, so the price quotations are coming in different forms. Some in terms of grams, some in terms of kilos, some are in terms of liters, some are in terms of tins, some are in terms of bags, name them. So how do we consider this as we look at describing and analyzing inflation so that we get to understand the money value if it's appreciating or depreciating according to these commodities in terms of their price quotations. So this is only but the start. We want to look at it, and we want to look at the types of price indices so that we see how to compute them in our next lecture. There are about 5, which I wish that we shall look at in the next lecture. Any question that far? We shall look at price indices and their computations so that we analyze inflation next lecture. If there's any question, you unmute and you ask. Is there any question? If there is no question, I want to thank you for your time today. We had technicalities. 2 people have raised their hands. Please feel free to unmute and ask your respective questions. Those who raise their hands. Difference between tax evasion and tax avoidance, we did that last time. We're not allowed to go back. I like your slides notes. Kindly share with me. I don't know. I shared some notes with your 2 colleagues who came to the office yesterday. I requested them to share with you. But we don't do what? We don't do them in purpose unless started. So that's yours. Wow, awesome lecture. We like that, the compliment. Kindly share. You can share. We like those calculations. Thank you. Bye, doctor. Thank you. Sorry, doctor. Sorry for. Where can I? For consultations. I did say this in the first day of the lecture. I even gave my contacts and the office to be found. Find me in ABC 101. I'm going right there after this lecture. Eka namba like tuwekeza sukuma leo. I have enough for myself. Pay the first deduction, yes. Pay is the tax that you are paying. That's what we are referring to as pay as you earn. This is what we are describing as income tax.
On.
That's how you say what?
Pay.
Which tax bracket are we using in the second example? The same one. But you go to the first papers, we do change.
Can you send me one?
I send you what? Mogaka, what do you want me to send you? Umeshtukia tu ndio unaamka. First papers, go to the library, you'll get them there. If not, see me, I'll give you from my files. I'm going to be in the office for the next 30 minutes. Anything else? For clarity purposes, we have our Cat 1 after next week. It will cover up to what we shall have covered next week. Please prepare. Don't start creating excuses. Get enough bundles. The cut will be done online. You'll only have one attempt. I began giving instructions about the cut. So prepare. You will be limited in terms of the time. There will be no going back. Once you've done the question, you've done it, hakuna kurudi nyuma. Ukiweka jibu utakuwa umeweka, kuchagua jibu utakuwa umechagua. Period. Ukichelewa itakufunga, na ile utakuwa umefanya ndio itakuwa yako. You log in, once you've logged in, that is it. You score 0, I'll give you 0.
And I also put this slides on the line.
So we shall put these slides there and the LMS, but I thought we could put all of them for the entire course at the end. Because if there are any calculation errors, I have to run through, but you can correct the way we are correcting. Because I do make adjustments here and there as we do go through the class. But you can allow the technician to put them on the LMS. Sawa? So thank you so much. Enjoy the weekend and take care. Class is adjourned. That is it.
Network.
Yeah.
So
Yeah, it's all good.
it's very good.
Yeah, I'm going to kind of.
We just need to